Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, looking at oil on the daily time frame to start. So the bulls are continuing strong, and we continue to see higher lows and higher highs after the triple bottom down at $47. Got over the 10-day moving average resistance, kicked it up on the reaction to the inventory report. Nice continuation, and we're establishing higher lows and higher highs and seeing nice continuation. So I'm going to draw a couple support lines here. The lows of the consolidation where we have pulled back. Got a support here down at the low. That was 49.91. And then the next support I'm looking at is 50.77 and 50.78, the low of Wednesday and Thursday. So admittedly, this was a fake out candlestick where after you see an oversold bounce play out and you see it play out this significantly, that was a pretty big recovery, a very clear bearish reversal inverted hammer, and a close at the low of the day. The fact that the bulls were able to turn that 180 and save that low and see a complete recovery negating that bearish reversal candlestick, that was surprising. I admittedly would have likely exited on this candlestick back on Wednesday after the inventory report reaction, after the week close. That would have been my exit point. Happy with the gains to the upside, and I would have missed out a little bit to the upside, and that's absolutely admitted. Not going to hit the top every time, not going to hit the bottom every time, but the bulls continued strong, and the reaction to the overnight bombing of Syria was certainly a bullish reaction in oil. We did see a bit of profit taking there, so we do have an upper wick of resistance to be watching. 52.91 is the next resistance that we are keeping an eye on. So the range, 52.91 resistance and 50.77 support. So that's a wide range. We can bounce around within this range pretty much all next week if we really wanted to. I won't say that's the wrong way to put it, but the bulls could bounce around within this range for a few days. So on the weekly time frame, we saw our bullish reversal week, and we confirmed it with further upside. So on the long term, this uptrend is absolutely still intact. And even though we saw that big dump on oil and all that bearish action, we kept highlighting the long-term trend was still favoring the bulls. And we didn't even test that support line. So the uptrend is still intact. We know $54 is an absolute brick wall of resistance. And if the bulls are able to get over $54, that will be very technically significant. And we'll start looking a lot more serious at XLE and the energy sector individual names. But as of right now, it's an oversold bounce recovery. We're going to be looking for a lower high to be set compared to $54. Then we're going to look to consolidate here on the weekly time frame, form a higher low, and watch this range tighten up a little bit. Whenever you see the high volatility pick up after an all-out dump like we saw here or an all-out breakout, that equilibrium pattern is very common where we see higher lows, lower highs, tightening range, and then we look for a break of that. So that's what we had here where we had our big bull breakout, our high, low of consolidation, lower high, higher low, and then a bull break. So here's our high and our low. We'll be looking for a lower high to be set sometime in the near-term future. USO really seeing that strong follow-through, and the candlesticks look different compared to oil and USO because of the times that the candlesticks close. We have the market closing at 4 p.m. Eastern, and oil closes after that. So we are above the upper Bollinger Band on USO. We got over the 100, or make that the 50-day, and the 200-day moving average resistances, closing above the upper Bollinger Band and closing strong. So after the all-out dump, we've made back a good amount of that all-out dump. I'd say about 60% plus of the dump to the downside has been recovered. So we saw a strong close up at the high of the day. The next resistance we're looking at is going to be the 100-day moving average of 1106. And look at all the previous support levels down in the low 1107, 1106, 1108. So there's a lot of previous support, now resistance in the low $11 range. And I would be cautious if I were bullish USO. I'd be watching for a potential bearish reversal candlestick from those resistances. And obviously no exit signal the past 2 days for the bulls of USO, but well aware that those resistance levels are looming ahead. Weekly time frame here for USO, same as oil with that follow through, bullish reversal candlestick, still maintaining a higher low pattern on the weekly and seeing some recovery, about 60% of the all out dump. Bulls have a lot of work to do to get back up to those resistances that we saw in the 1160s before the dump, but the bulls pretty pleased with the way the recovery has gone so far, and especially the speed at which that recovery has played out. So the oil bulls still in control on the daily time frame, but we're keeping an eye on that upper wick that did form by the close today. So I appreciate you watching, and we'll check back in for the rest of the week and forever and ever. See you soon.